Tom. Tom is a few years out of college with a great job and a lot of credit card debt. He wants to get out of that debt but isn't quite sure how, especially because he didn't qualify for a good enough balance transfer card detailed in our two-part video series, How to Get Out of Credit Card Debt. While Tom may think all hope is lost, there is another way. Personal loans. However, before we continue, if Tom doesn't have a firm understanding of what a loan is or how to effectively use one, we highly recommend watching our two videos, How Do Loans Work and Loans Mistakes and Best Practices before continuing further. But let's get back to the matter at hand. What is a personal loan? Well, like most loans, personal loans offer Tom a fixed amount of money at a certain interest rate for a set period of time. However, unlike most loans, personal loans can be used for a wide variety of expenses, ranging from home improvement projects to paying off credit card debt. Speaking of credit cards, personal loans, especially those from established online lenders, will have interest rates lower than almost every credit card. In addition, if Tom borrows to an online lender that considers not just his credit score, of which he'll need at least a 640, but also his education status and earnings potential, those interest rates can be even lower. Plus, applying for a personal loan from an online lender couldn't be easier. All Tom needs to do is fill out a short credit application. Then the lender will likely use a soft pull for his credit history, which won't hurt his credit score, and within a few minutes Tom will be able to see the amount he can borrow and the APR he qualifies for, a process he can then repeat at multiple online lenders. Should Tom choose to get a personal loan from an offline lender like a big bank or credit union, we just have one warning. These institutions tend to have higher interest rates due to their much greater overhead. Plus, they tend to avoid soft pulls, which can make it difficult to check your rates without hurting your credit score. So let's assume Tom has chosen to get a personal loan through an online lender. What's his next step? Well, assuming he's chosen his lender and has checked his rates, he can then fill out the actual loan application online. This should be a very simple process, but there is one thing to look out for. Online lenders often charge a non-refundable origination fee for creating the loan, generally between 1 to 5% of the loan's value. This means two things for Tom. One, if he wants to borrow exactly $10,000, and he has to pay a 1% origination fee, he'll need to borrow $10,100 instead. Two, if Tom wants to use the loan proceeds to pay off credit card debt, he needs to make sure the origination fee is less than the interest he'll save by using a personal loan. Finally, assuming the math checks out, Tom just needs to submit his application. At this point there will be a hard credit check, but assuming Tom is approved, his bank account will generally be funded within a few days. Tom is now on his way to being debt-free. Thank you for watching. Hit the subscribe button for more upcoming videos.